Hi everyone, and welcome back to the channel. Whether you're nearing retirement or just beginning to think about life after work, maybe 10 years away, this video is certainly for you. Today, we're talking about 9 essential steps to achieving financial freedom in retirement. These aren't quick tips or fluffy hacks. These are actionable strategies to give you control, clarity, and confidence as you plan the next chapter of your life. So, grab a notebook, a coffee, or something maybe stronger, and let's get into it. Step number one is to get crystal clear on your vision for retirement. You can't build a retirement plan if you don't know what you're building it for. The first step is getting crystal clear on your vision. So ask yourself, where do you want to live? What do you want your day to day to look like? And what hobbies, travel, or lifestyle changes do you dream of? This step isn't about money, it's about defining a life worth funding. Pro tip: create a retirement vision board with your spouse or partner. It makes the goal feel real and keeps you aligned as a team. Step number two: know your numbers. Now that you've got the dream, it's time to face the math. You need to know, how much will your dream retirement cost per year? How much income will you have from Social Security, pensions, or annuities? And what's the gap you need to fill from savings? And remember, you can't manage what you don't measure. Build a basic retirement budget that includes fixed expenses like housing, insurance, utilities, variable expenses like travel, dining, and hobbies, and one time or surprise costs like healthcare and home repairs. Here's a pro tip for you: adjust for inflation. Aim to assume a 2 to 3% yearly increase in expenses. Step number three: maximize retirement accounts. Now let's talk strategy. With 10 years to go, this is your prime window to supercharge your savings. And here's how: max out your 401k, IRA, or Roth IRA. If you're over 50, take advantage of catch-up contributions. That's an extra 7,500 for your 401k in 2025. Consider an HSA for tax-free healthcare savings if you're eligible. Tax efficiency is key here. Roth accounts grow tax-free, which gives you more flexibility in retirement. Here's a pro tip: if you're behind, increasing your savings rate by 1 to 2% every 6 months will definitely help. You'll barely notice it, but it adds up really quickly. Step number four: eliminate bad debt. Carrying debt into retirement is like dragging an anchor behind your sailboat. Your number one priority should be eliminating all high interest debt, especially credit cards and personal loans. Mortgage debt is more nuanced. If your rate is low and the math works, you might keep it. But emotional peace matters too. Here's an action tip: list all of your debts, interest rates, and balances. Focus on the avalanche or snowball method and attack one debt at a time. Step number five: optimize Social Security. Social Security is one of the few guaranteed income sources you'll have, but timing is everything. Claim at 62 and you get less, up to 30% less than waiting until full retirement age. Delay until 70 and you'll get up to 8% more per year. The best time depends on your health, family history, marital status, and need for income. Here's a pro tip for you: if you're married, coordinate your claiming strategies. A higher earner might want to delay for survivor benefits. Step number six: build a retirement income plan. This is where the rubber meets the road. Your income in retirement might come from Social Security, pensions, investment withdrawals like your 401k, IRA, etc., and part time work or rental income. The key here is don't just guess. Plan when and how you'll draw from each source. You want to avoid a sequence of returns risk where withdrawing during a market dip hurts your long term results. For your strategy, consider the bucket strategy. Bucket number one is 1 to 2 years of cash, bucket number two, 3 to 5 years of conservative investments, and bucket number three is your long term growth. Step number seven: protect yourself with insurance. As you age, risk doesn't disappear, it changes. Here's what to consider: long term care insurance, especially if you're in your 50s or 60s. Umbrella liability insurance. Reviewing life insurance needs, you may not need that term policy anymore. And finally, Medicare planning. Don't wait until the last minute. Here's a pro tip: Run a cost comparison between buying long-term care insurance versus self-funding. Step number 8, simplify and consolidate. If you've got old 401ks, scattered bank accounts, or multiple financial advisors, now's the time to simplify. One or two platforms, one clear financial strategy. Less paperwork, fewer mistakes, more peace of mind. Here's an action tip. Roll over old 401ks into a single IRA. Carefully watch for fees and tax traps. Cut down to one check-in and one high-yield savings account. Step number 9, get professional help and stay the course. Retirement planning isn't a one and done process. It's a journey, and even the best plans need tweaks. Consider working with a fiduciary financial advisor, someone who puts your interests first. A good advisor will help you with portfolio management, tax planning, withdrawal strategies, and estate planning. Here's a pro tip for you. Don't fall for one-size-fits-all advice. Retirement is personal. Your values, your health, your goals all matter. So if you made it this far, you're already ahead of most people. Retirement isn't about checking out, it's about stepping into a new, exciting phase of life with clarity and confidence. If you got value from this video, please like, subscribe, and share it with a friend or family member who needs this. And drop a comment below. Which of these 9 steps are you working on right now? Remember, it's never too early or too late to start planning for the freedom you deserve. See you in the next video.